Good morning, Rotimi.
Good morning, Balaji.
Thank you for coming on the program. I would like you to talk to us about what has led to the continuous slide in the all-share index for the past 6 trading session.
You've actually touched on it because Dangote Cement was more responsible for the downward trend in the market yesterday. Most importantly, the market break was positive, and if you discount the loss of 450 crore by Dangote Cement, the market yesterday will have closed at about maybe 0.4, 0.5% positive. And I think the expectation of the outcome of MPC today, I think looking at the transactions in the banking sector stock yesterday, majority of them gaining some points, it implies that there is some positive expectation with respect to that. But we here, the operators, we're looking at it in a very different way from the way the investors are looking at it, in the sense that with the inflation rate at 16.5%, going back to what the CBN did the very last time when the inflation rate got to as high as over 13%, that there was an adjustment to hedge that. So if they are going to do this thing this time around, there definitely is going to be a minus for the capital market. So we are honestly expecting what the outcome of today's MPC meeting will be. And at the end of the day, the market will be able to take adjustable position to reflect what is going to come next.
Now that we've seen massive sell-offs in the market, in the equities market now, where investors are actually exiting the stock market to move into what many call the more stable market, that is the fixed income market. Why are we seeing the increased appetite for that segment of the market?
I think looking at it very critically, what is most important for any investment is the return, and also when that return is guaranteed. For the equity market, such returns are not guaranteed. And for what we've seen a significant drop in the all-share index for year-to-date position at over 3%. Is definitely not in the best interest of investors. So there's that likelihood that they want to go to a safe haven, and that safe haven that is closest to them is the fixed income market. So if we are seeing a flight of funds from the equity market to the fixed income market, I think it is quite expected. But I want to believe that the results that we are seeing presently too are not really helping matters at all. So I think as we see more of those results, especially from the banking sector stocks, then definitely we may begin to see a retrieval of such funds that have left coming back to the market to take positions in the banking sector stocks.
Now, if you look at the trend in terms of how the earnings have been, they don't look quite encouraging. But are you bullish on the markets going forward? Do you think that the earnings may turn the tide, rather, for the market in terms of recording positive trades?
I think for me, the way it is right now, some of the banks, the likes of UBA, Access, GT Bank, they have chosen to push forward the day they will make the rendition of the half-year result to the exchange, basically because that result is going to be audited, and there's also the possibility of paying interim dividend. So that means if they are going to pay interim dividend, that means at least there is some element of positivity in their profit after tax. And if that be the case, then definitely it's going to put some smile on the faces of the investors, and that definitely will make investors be bullish on those securities. Okay. So I want to believe that with all that in place, I think the market, at least some of the securities, will still have to go the other way up. That is, they are going to go north instead of the present situation that we are seeing right now. So I believe that investors will look at it critically, and we, the operators, will definitely advise them appropriately.
Thank you so much, Rotimi Fakejo, CEO, Enterprise Stockbrokers, for your insights.